Fed cuts rate by 25 basis points in third cut of 2025. You know what's crazy? That's the headline of the day. It is not the headline to pay attention to. Right now, that news is breaking. We have Russell 2000 breaking all-time high. This is a monthly chart. We have the total crypto market cap chart excluding Bitcoin. This is altcoins continuing to consolidate on the monthly. It puts a smile on my face, the setup that we have going into 2026 because of the macro landscape that is setting up at the same time. Bitcoin dominance right now around 59%, hitting key moving average resistance on the weekly. A very similar setup happening potentially as QT ends this cycle compared to QT ending the last cycle. And I want to look at Ethereum. Ethereum in terms of altcoins, kind of bringing the story together as far as even short to midterm price action. I think it's going to give us some really nice clues. So if you're an altcoin holder, if you're a crypto holder, Ethereum is going to kind of help us to anticipate the volatility that might be ahead going into 2026. But 2026, everybody, is coming together and shaping up to be a very bullish year. Hit the subscribe and like on the way in. If you're not in our intelligence system, we have a free trial going on right now. Get back there if you're a macro investor. Check out our risk models. Start planning your strategies in these markets because as I say, and we're going to talk about it, 2026, I know it's been a while. I know it's been a long time. It's been years of tightening. This is what we're looking at. We just survived all of this. That's coming to an end. So let's start the video. I want to look at the charts, obviously, but I want to point a couple things out to you. This was from a little bit earlier. I saw this. The real risk, and this is what I genuinely want to point this out. The real risk is the Fed's 2026 outlook. I just want to say something to you. What the Fed says right now, be very careful paying attention to it too much and looking too deeply into what the headlines are saying. Fed's 2026 outlook. I'm going to explain why. Just be careful. September projections signaled only one cut next year and a 3.4% year-end rate. What is that all about? That is hawkish. Analysts expect guidance to turn neutral to hawkish as the Fed stays on hold into early 2026. Be careful following these headlines because I want to show you the real story. Here's what's going on. Trump says he has a name to replace Powell. As you know, we've talked about it. I did a post on it. But this is what's happening. It's called a transition. And so what does that mean? Well, check this out. This is Treasury Secretary Bessent. You could do the earliest Fed nomination and create a shadow Fed chair. That's important because Trump is about to announce very soon, it might be the beginning of January, the next Fed chair. And Bessent is saying, based on the concept of forward guidance, no one is really going to care what Jerome Powell has to say anymore. Federal Reserve, here's the headlines now as we kind of look at this week. They're set to cut rates, but may signal a pause. All this speculation about 2026 being hawkish, it's going to be a pause, right? All these headlines you're going to see. Look at this clip.
I want to ask about interest rates because a lot of Americans agree with you that they're too high. You're going to pick a new Fed chair soon. Is it a litmus test that the new chair lower interest rates immediately?
Yes.
Done. Yes. Keep in mind, this is the worldview and the approach that Trump has. Lower interest rates. Do it now. Look at this clip.
Now, I believe we should be 3 or 4 points lower. So that's over $1 trillion we pay every year in interest. And it's really just a paper calculation. You sign a document and you say.
This is his take, everybody. And he is getting ready to appoint, very likely, a Fed chair who shares his sentiment. So all these headlines that you're seeing right now, hawkish, pause, we're going to hold for much of 2026. I'd be very careful listening to those things. And that's what I want to talk about in this video. I want to point that out as we start kind of dissecting, and we can even say speculating on the macro for what is in store. But you're going to see these headlines. But just keep in mind that, just as Bessent says, what Jerome Powell says is really not going to matter much anymore. If you're kind of a forward-looking person, if you're a macro person looking at the reality of what's shaping up for 2026, and that is a massive transition happening. So let's jump into kind of everything going on with the charts. Here's QT, came to an end. I don't want to dissect it or talk about it. I just want to mention it to you because that is important context for the setup of 2026. But here's really what I want to kind of focus on. Look at the Russell 2000. I did a video on this, I don't know, a couple of weeks ago, a week ago. Even right now, I open up this chart. We are absolutely just testing all-time highs. Check out this wick from mid-October. We are just, I mean, this chart looks like it's getting ready to break into all-time high territory, into price discovery. Could there be resistance again? Yeah, we might come down. And I want to kind of translate that on the crypto charts, Ethereum charts. But right now, this is the chart to pay attention to, everybody, because this is the macro thesis that matters. Not Fed is hawkish today. All this talk about pausing in 2026, when at the end of the day, the plans that the incoming Fed has and the plans that Trump has are two entirely different things when you compare it to what these headlines are saying. But what matters is the macro. What matters is everything I've been trying to break down in recent videos. That is years of PMI contraction here. And that is the Russell 2000. The purpose of doing that video was especially to correlate it to the PMI, the business cycle, because the Russell 2000, as I've been saying, and this is what the video was about, that's a reflection of business activity, not the S&P. It's this one, these smaller cap companies. That's what the Russell 2000 is. And so if we start seeing this pick up, we're likely going to start seeing PMI start expanding. And these two things happening, everybody, that is what we will see in a bull market, more specifically in a crypto bull market. Here's last cycle. There's Russell 2000 breaking out in November 2020. There's PMI expanding. And you can just see PMI expanding through these cycles and Russell 2000 moving with it. If this is the move we're about to get with, I'm not even going to call it an easing cycle. That's for another video to get into the nuance of QE. I'm not sitting here saying QE, everybody, we're going to pump, but I am saying the drain has stopped after years, and we have a very pro-Trump Fed chair in play, meaning they share the same sentiment in terms of rate cuts, in terms of economic expansion, and really helping the economy expand. And so the setup that we have, yeah, maybe short-term volatility even still. The setup for the macro, I think, is looking very good. So this translates to the crypto charts, because here's where we are. We have been in years, and I don't want to repeat myself, but this is the case. We've been in years of contraction, and here's where we are, everybody. We are hovering in like all-time high fear areas, and we're at like all-time high areas. I mean, really, if you think about it, on just this chart, this is excluding Bitcoin. And I realize a lot of altcoins are far off of their all-time highs. But what you have here is a macro illustration of where crypto is. That is to say, yeah, a lot of altcoins and a lot of you altcoin holders out there, those altcoins are down more than what you see here from all-time highs. Ethereum is a big player on this chart, and it's holding the chart up very well. But this is an illustration of macro cycles of liquidity and the liquidity expansion and liquidity rotation that is about to happen. What I mean by that is, here's liquidity expansion and PMI expansion. Last cycle bull market. Altcoin holders probably were not happy here, right? Altcoin holders were probably not even that happy right here. November 2020. We just saw Russell 2000, what it was doing in November 2020. Guess what? Altcoin holders became pretty happy as the expansion happened. Well, this is my sentiment right now. This is my thesis right now as we go into this new liquidity expansion. I don't know the time frame of it exactly, but I do know when you look at Ray Dalio and what he's saying, printing into a bubble or stimulating into a bubble, however he worded it, and his thesis that we're about to get a crazy move followed by a crash. I'm on board with that sentiment. And so we get the expansion here, then we get the expansion on altcoin charts. And Ethereum does a very good job of the short term just to kind of, I think, bring it all together, because I know a lot of you are like me. You're watching the charts. You kind of are watching short and midterm. I know I've been doing more macro videos, but I'm always watching price. I really am. And what I want to point to your attention is last QT, when it ended back here, September, we fell. So there was like this post-QT fatigue. Crypto kept falling. But if you remember, we started bouncing in December. Are we going to see a setup similar? I don't know. Right now, it's interesting. We're back at this apex of this multi-year triangle. Ethereum is testing it right now. Could we fall? Could Ethereum fall back to the 200-week moving average? Yeah, 2,300, 2,400. It's in play. We fell after QT for a couple months last cycle. Maybe that happens again last time QT ended. But what if it doesn't, right? What if at the end of this year, going into early next year, there's just activity, there's PMI expansion, there's certain headlines that trigger a continued move up. Right now, Ethereum's at a very even short-term area that we should pay attention to. Let's anticipate crypto could continue to consolidate similar to 2019 after September. QT ended. Let's anticipate we might consolidate further. For me, that's not a bear market. That's just even more patience required for crypto holders. But what if Ethereum, altcoins actually do start continuing a move up now with the Russell 2000 breaking to the upside? Because remember, it was 2020, Russell 2000 was breaking that resistance. November 2020 started making a move. Do I need to remind you what the altcoin charts were doing in November 2020? Check it out. November 2020 right here. That's where we were. And look where we are right now. There's not much more to say in terms of why I think the way I think. Could I be wrong? Could we enter a multi-year bear market? Could we enter just some, terrible cycle? Yeah. But I'm trying to present to you why I don't think that is what's happening right now. And you bring into play our risk models that we have back here. Obviously, the members that we have in our system, they have their exits, I'm sure, planned, but it's like we're not even really there yet at all, right? So we're on the flip side of that territory. The plan for the move, and that is to say, maybe there's people out there in some of our risk models that are just like, I'm accumulating. You go to Cardano, you go to Chainlink, and those risk models are in accumulation territory. So people are planning, and it's, I think, a matter of how you're going to play this, how you're going to plan. My thing is always anticipate every scenario and just be ready. But this is my thesis. I wanted to put it out there for you today as this rate cut news drops. There could be short-term volatility as always, so be prepared for that. But those are my thoughts. Hit the subscribe and like on the way out if you enjoyed this video. And if you're not in our intelligence system with our risk models, all that good stuff, get back there, try us out, and would love for you to join our members. I will see you all in the next video. God bless.